We have tons of news lined up for all those who are watching this broadcast. We, as usual, begin with the stock markets. So many triggers for the stock markets, apart from the fact that India's time in the sun as a global power, India's significance as a global power is on display at the G20 Summit. So much news coming in from the G20 Summit. We will be discussing that mainly because the G20 Summit also is set to come out with regulations on cryptocurrency and artificial intelligence. So we are keeping our eyes out for that. But before we get you all the lowdown on how all that's happening with the G20 is impacting the stock markets, we begin by understanding how the markets opened for the day's trade. We have Kush Bohra, founder kushbohra.com, joining us this morning as well. But there you go on your screens. Nifty, Sensex, Karthik, this week has been all about flattish openings and flattish closings. Markets moving in a very narrow range, mainly because there are not too many news triggers that are pushing the broader markets. How have the markets been this morning?
Not too good, Krishna. In fact, what we've seen over the last week, in fact, for a very long time, we've seen a very, very marginal upside in the markets, a marginal green, hints of green in the markets on a daily basis, but today seems to be an exception. In fact, we are starting with broader markets, both Nifty and Sensex down about 0.23, 0.24% or so, quarter of a percentage point. Not great news. I think this is largely stemming, from the increase in oil prices that we are seeing, the anticipation of OPEC looking at cutting voluntarily crude production. We are looking at a direct impact on the rupee, nearing its almost lifetime lows right now at about 83.15 rupees or so to a dollar. So markets seem to be taking that a little bit on the chin this morning, but the upside continues to come from the mid caps. The Nifty mid cap is up about half a percentage point this morning. I think on back of that and other global cues, even the IT stocks are taking a bit of a beating. I think the decline in rupee should usually augur well because that makes your exports a little more profitable when you convert them back to INR.
Right.
But broadly, that's what we are seeing this morning.
Right. So also, the good thing to notice from that chart is that whatever happens, there's still some space for uptick in mid-cap stocks and small-cap stocks. They're continuing to have that space to grow, and you're seeing the green uptick over there. But then Nifty, Sensex, not too much of movement. We have Kush Bohra, incidentally, Karthik, joining us in the broadcast. Kush, very good morning. Thank you so much for taking time out, as always, being with us. Markets, tell us, Kush, from Monday to Wednesday, flattish opening, flattish closing, in the red, in the green, barely, not too much movement. But this morning, not the cues, decidedly not very good, mainly because of the way oil prices are going.
Good morning, guys. What fab energy this is, and I'm so glad to be here again. Let me try and shift the perspective a little. As Karthik was just saying, oil prices high, rupee hit a low. Despite that, we've been in the positive, even though marginally. And from technical perspective, if I could just somehow show you my charts and my graphs, what is encouraging is that, the Nifty was trading for the last, month or so, the good part of a month or so, in that narrow range of 300 points, 19,550 to 19,250. We tested 19,250 at least 3 to 4 times, and then we rebounded from there. But now, more encouragingly, 19,500 and 550 is the zone that we've been able to cross. Yesterday, we closed above that, even day before yesterday, even though marginally, but, we closed above that. So for me, even this marginal uptick, in the scheme of things, in the, a grand scheme of things, is actually quite positive. Now, I see red on the screen today on the Nifty, at least down by 25 points, but I won't read too much into this. And I'll give you a very simple reason why. Today is the weekly contracts expiry on the Nifty. We know the Bank Nifty expiry shifted to Wednesday, so that happened yesterday, and hence there was some pressure on Bank Nifty. Today, similar story playing out on the Nifty. We've got the weekly expiry, but if you see the options contracts, if you see the setup, the base at around 19,500, 19,400 from the put side is so significant. It's actually much higher than the call base. So that is suggesting that the supports are now getting in place. Once the expiry hangover is out of the picture, Friday come Monday, we'll probably see, even if a gradual, but an uptick, in the indices all over again. This is a very encouraging setup, and whatever we've seen the last, 2-3 days, however marginal, has been positive.
All right. Before we go any further, I just want to quickly check the mid-cap stocks. You're seeing this morning too, even in a sea of red, mid-cap index is up. Does that mean that mid-cap stocks are not really overvalued at this stage? There's still so much value to be found?
Well, there are certainly pockets where you see overstretching, and something that we see in the technical space called the RSI negative divergence, where the stocks actually run up, but the strength is not the same. Now there are these pockets that we're seeing, but this is for sure a stock pickers market, because if one sector doesn't perform, the other one sort of starts moving. It's the time for the specialty chemical sector to sort of perform now. So there are leadership changes and there are sector rotations that we are seeing. I wouldn't rule out, a brief dip in the mid-cap space, just given the fact that, the kind of run-up that we've seen. The index itself is at RSI of 85 on the daily charts, which is suggesting that it's already into an overbought territory. Okay. So while I will be a little cautious, I'll be cautiously optimistic here.
Okay, cautiously optimistic on mid-cap stocks. Good message going out to all those watching this. Yes, sure, there's value, but be cautiously optimistic. You're talking about, Karthik was talking about the markets, the broader markets, and the way they've been and the way they've been running, the global triggers affecting markets. You're talking about once the triple witching day hangover is done with, you will have from Monday onwards, recovery in the broader markets. But then again, there is another cue we're waiting for, and that is the US FOMC meet, the US Fed. Less than 10 days from now, we'll know whether they're hiking rates or they're holding rates. I'm sure the markets has factored in that already.
Most certainly. In fact, I think the fact that we've not moved up by a drastic amount is perhaps the fact that the inflation data and the jobs data and the employment data and the agriculture data and the all kinds of multiple data that are coming out from US are so confusing. When we write our reports, one morning we're saying that the data is suggesting a hike, the next morning we're writing it suggesting a pause. So it's very confusing, and hence you want that hangover to get out of the way more than anything else. And hence we've seen the Indian markets sort of run up, but not by much. So I think once that hangover is done, we'll probably, for the next couple of months, at least till the next FOMC meet, we'll probably have somewhat of a clear run.
Kush, how many hangovers?
I'll probably have my eyes. Sure.
Kush, you have a triple witching day hangover that's affecting broader markets today, and then of course the US Fed rate hike hangover as well. We'll have to wait for all these hangovers to end to really see where Indian markets, find their levels post that. Kush, stay with us. Karthik, I want to check with you. One of the biggest news triggers this morning, apart from all of this, is the Foxconn story. We will get to that, but before that, talk to us about the stocks in action this morning that you've sort of picked up upon.
So, Krishna, I think a lot of news coming in. Of course, one stock in focus or one group in focus for me today happens to be the Tata Group, and within Tata Group, it is the left side. The left hand taking out something from the left pocket, putting it in the right pocket. So we are seeing this $1 billion 5-year spanning deal between Tata Motors owned JLR and Tata Consultancy Services TCS. And it's a $1 billion deal to span over 5 years, where TCS now backs this contract to make JLR, the UK-based subsidiary of Tata Motors, more agile, transformative, more driven on data protection, more driven on cyber security, and overall just transforming, reforming the long old organization and giving it the wings of agility using technology. So this is one trigger this morning for me. In addition to this, of course, we've also got a lot of action pretty much on a daily basis on Reliance.
Of course.
And just when you think that, okay, the Jio Finance story, yeah, we've overdone it, we've spoken too much about it, and yet we don't know where that is headed. There are these new surprises every morning, and in fact, they have stopped being surprises. Every morning you wake up to some news on Reliance Retail. So this morning, news suggesting that Reliance Retail is picking up 51% stake, undisclosed amount yet, from Alia Bhatt on her child wear startup called Edamama. And this 51% stake comes again with another parallel news coming on QIA, Qatar Investment Authority, investing $1 billion more in Reliance Retail to pick up 1% stake, taking Reliance Retail to a valuation of $100 billion.
Okay, we'll take a short breath. We will take a breath. Kush. I just want to bounce this off, Kush. The question with Reliance, two questions, even when they had their AGM, two questions. When are you going to list Reliance Retail? When are you going to list Reliance Telecom? It's telecom business. The retail business, with the latest fund infusion of $1 billion by Qatar Investment Authority, values it at $100 billion. There is still another
Krishna, just to put it in perspective, WhatsApp was bought by Facebook for $21 billion. Flipkart was bought by Walmart for $17 billion. We are talking about a company, a subsidiary, yet to be de-merged, 5 times that value.
Kush, what is your thoughts on the listing of Reliance Retail? We still don't know what's going to happen.
Demerger, listing, when? I think there's a lot of value to be unlocked there.
True, and if I can say so, did I tell you or did I tell you, right? The last time around I was here, I was saying Reliance is a screaming buy for me, not from a momentum, not from a near-term perspective, but if you're looking at anywhere from 6 to 12 months time horizon, Reliance at these levels is a buy. Now we don't know when the listing will happen, but the fact that the kind of news flow that we are seeing is extremely encouraging. And I was recently just today morning, reading a news article about the premiumization of Indian economy. So while they are not, buying just the retail, segment. The masses segment of it, they're also investing heavily in the classes segment of it, and that is also something that is adding to the $100 billion valuation. So overall, as long as as and when the listing happens, till then the Reliance stock itself is a screaming buy, at least from a 6 to 12 month perspective.
But Kush, a slight dip in Reliance today. Is this down about 0.3% or so?
Profit booking time?
Profit booking, or it's the right dip to buy. But again, what is driving this this downside this morning? Is it again rising oil prices? Because let's not forget, Reliance is also, among many other things, Reliance is also one of the largest oil processors in the country.
30% of the output of the country belongs to Reliance, for God's sakes.
No, absolutely. See, the fact that, these triggers are there, but there isn't a clarity, that's the only thing that's keeping the stock under pressure. I mean, the day we have an announcement on the days, the dates of, listing of some of these entities, is when we'll probably see, that actual unlocking happening and the stock running out. So the hangover, again, probably we've overused that word today already, but as long as, that hangover remains, the stock will remain under a bit of a pressure. And hence I suggest that, from a near-term perspective, till we get that kind of clarity, the stock might not be a trader's favorite counter, but the kind of support that the stock's taken at around 2350, 2400 kind of zones, this does seem like the profit booking correction. The round is over. Accumulation seems to be to have begun from here, and hence this is a good buy. The stock's already down from what 2600, 2650 odd levels. So yeah, this is a good time to enter from a long-term perspective.
All right, then some serious advice on the Reliance stock coming in. Stay with us because I was looking at the stocks in action that you had put up, Karthik, immediately after this big stocks, Tata's. Both stocks are up incidentally after when you take money from one pocket to put another. Both Tata stocks are up, but unfortunately Reliance is not for different reasons, obviously. Then I saw these gaming stocks. You have especially Nazara Technology. Talk to us. That's another stocks in action. There's Zensar Tech as well. What is going on?
So Krishna, I think the gaming stocks have been volatile for a while, and that volatility, in fact, it had seen a massive downside and then a great recovery. If you remember, obviously you would remember that this GST clarification that came by way of levying a 28% tax on the face value of every transaction on gaming platforms, that led to a massive bloodbath on gaming stocks, Nazara and Zensar and many other stocks in particular. Now, what really happened thereafter was this buying opportunity that Zerodha brothers, Nitin and Nikhil Kamath saw and pledged to invest about 100 crore rupees or so in Nazara Tech. But what I'm reading this morning is that the Supreme Court has actually taken notice of a long-standing Karnataka High Court cleared case where the GST network had actually, and the finance ministry had actually imposed a 21,000 crore rupee tax notice on an unlisted company called Gamecraft. By then, and I think I'm talking about 2021, 2022 nearabouts, and at that time, GST evasion of 21,000 crores was suggested, and that was the kind of recovery being made again on this whole issue of 18% or 28% face value or platform fee, etc. And Karnataka High Court back then had quashed this penalty by the GST authorities. saying that Gamecraft is in no way responsible for paying this 21,000 crore rupees. Today, unfortunately, the news emerging is that the Supreme Court is saying that the Karnataka High Court order cannot be taken as a precedent for other courts to follow. And it looks like those books are going to reopen, and there could be this sort of, tax imposition back on Gamecraft. And that seems to be driving the entire gaming sector, down today. So Nazara Tech is down about 2.5% or so. Another gaming company, Zensar, incidentally, is up about 1.7%. So honestly, when I was looking at this data, I couldn't for the life of me tell what the real trigger is.
Maybe we can check with Kush on that. Kush,
Absolutely.
what is the real trigger? Huge news that Karthik is talking about, and gaming companies, online gaming companies have been in the dock ever since the GST regulation from the government came around, making it a sin tax on on risky earnings, so to speak. But what is happening with Zensar and Nazara this morning?
Well, see, I wouldn't have, I wouldn't be surprised to probably see Nazara, probably rebound and, come up and trade in the positive, even by the end of the day or maybe in the coming weeks, actually. It's just that the stock has risen quite sharply. 700 odd levels, it was languishing and not far back, about 15 days ago. And then, the news of, the Kamath brothers, probably pledging or even buying stake has sort of, given a boost to the stock. Now, from 700, you go to 900, approximately about 30% in 15 days. Not a bad return at all, right? And hence the profit booking session for the last 2 days. Otherwise, I don't see anything wrong, with the stock per se. So, once this fall stems, could be around, 840, 850 odd levels, is when I would look to re-enter, in a stock like Nazara, Technologies. Overall, the setup looks positive. Everything said and done, if you're implementing a syntax, which means there is a degree of stickiness, or there is a degree of adaptability, that everyone is now making to these stocks and to these platforms. So I think these businesses are here to stay. Zensar again, has actually consolidated and now giving a breakout. So I think the sector and the investors will wait for some more clarity on the Gamecraft news before it cements and comes into sort of any kind of a verdict. Till then, I think the stocks will run their course.
All right, that's the take from Kush on the gaming stocks. Quickly, we're moving to the other sector that's in focus as far as stocks in action this morning, and that's the pharma sector. And that's not a sector in focus this morning. It has been a sector, Kush, I'm sure you're smiling the moment I say pharma sector. This sector has been giving great returns in the recent past. Karthik, talk to us about what's happening with some of the stocks this morning.
So, Krishna, I think it's emerging now from news reports at least that Torrent Pharma seems to be a front runner in acquiring Cipla. And this again happens at a time when Cipla itself, which is up for sale, has invested in purchasing a South African pharma company right now, so sort of bloating its financials even more than what it is at. And in addition to Torrent Pharma, we had seen Dr. Reddy's and Bain Capital also being among the front runners. But it seems now that there is going to be some sort of a definitive idea on Torrent Pharma being the final sort of bidder to go ahead and acquire Cipla. But again, these are just reports right now, speculative in nature, and we really don't know which side that's going to be headed towards. So I think all pharma stocks right now, for some reason, we see that both Cipla and Torrent Pharma are in the red today, even though the deal seems fairly hot. And Dr. Reddy's, which does not seem to be the number 1 contender right now, is up about a percentage or so.
Okay, Kush, this Swayamvar for Cipla is going on. We don't know who is the one who will tie the knot. But if going by Karthik's own analysis, the fact that Dr. Reddy's might not be buying Cipla is pushing the stock up. Is that the way we can interpret it?
Well, I would love to have interpreted it in that fashion. It's just that the stock's actually not done much even after the news of takeover and the fact that there have been multiple contenders for this. 1275, 1230, 1300 was the zone where the stock had resisted previously. It's still there, which means the street's waiting for the kind of valuations that will be announced. It's probably going to be like a promoter to promoter deal. Not sure if there is going to be too much value left on the table, either side. Hence, you don't see that kind of a jump. Otherwise, a news like this should have pushed the stock, significantly higher, and we are not seeing that kind of a traction. So on Cipla, at least I'd like to wait. But yes, the reason for smile, was, on the pharma sector was, to corroborate something that Karthik said earlier, that, the indices don't seem to be moving anywhere. Now, if I were to, corroborate his point, the last couple of days when the indices have moved higher, the drivers have been the defensives, FMCG and pharma. So is this a play where, the indices are going higher on the back of defensives? Yes, but is this something to be wary about? Not sure, because we've already fallen about 3-4% and now rebounding. So I think safely we're in a zone where the selling has probably been done and dusted, and we'll probably see some upside. But yes, on the overall view of it, pharma stocks seem to be doing well. And if I were to pick a sector, I would pick the hospital space from here, the likes of Metropolis, Rainbow Children's Medicare, Narayan Hrudayalaya. These are the spaces that are probably quite clear in terms of the way forward. So yeah, these are the stocks that I'd have from the pharma space on my radar.
All right, that I knew that smile, because so many investors are smiling because they're invested in pharma stocks and they've been doing consistently well. But again, they've been hit by big news. We'll have to wait and watch, how much growth pharma stocks can get going forward, especially in a market like this where there are no big news triggers per se. And and you've been talking about how stock-specific action is all this that's left, as far as triggers go until the US Fed comes out. Talking about stock-specific action, Karthik, the PVR Inox stock today, it's part of your stocks in
Kush,
action.
your smile has been stolen by my friend Krishna here. Yeah, you talk about PVR, you talk about movies, and our man's face lights up.
And look at it, on a day in which everything from crude prices, to G20, everything is driving the markets, and there you go. Jawan, is it going to be another SRK blockbuster? Because, and that's the reason why you're seeing the PVR Inox stock up so much. 3.91 lakh tickets sold already in advance bookings. That's the highest ever across multiplexes in India. So clearly, PVR Inox stock is up because the data is pointing to huge bookings in multiplex. And if you go to a multiplex today, anywhere in India, the one movie that is running everywhere is Shah Rukh Khan's Jawan. 3.91 lakh tickets sold, 50 crore plus earnings on day one, already with advanced bookings. But the overall day one collections are expected to cross the 100 crore rupee mark. And Karthik, Kush, bear in mind, this is a regular weekday release. Thursday release, no holiday, no festival, no nothing. Just a regular Thursday. Just that it's converted into a Shah Rukh Khan festival because Jawan is releasing with some incredible numbers over there. 5th all-time high advance booking for an Indian film ever, beating his own Pathan's record for advance bookings. He's not beating Bahubali 2, which is the number one for advance booking so far in India for any film. But here is Shah Rukh Khan and the Jawan tsunami hitting the box office, and the PVR Inox stock doing so well. Karthik has already pointed out this morning how well the PVR Inox stock has done. Kush, generally, the multiplex business has seen some roaring times recently, isn't it? South films, Hindi films, Hollywood films, all have augured well for Indian multiplexes, one way or the other, whichever language or market the films belong to.
So, do you want me to put on my technical analyst hat on this one, or a fanboy hat on this one, right?
Both,
one at a time.
Please do.
Let me start with the latter. I have friends in the industry, both on the production side and on the distribution cinema side also. And I can tell you right now, it is not now. It is actually a month and a half ago when the industry, the Industry Connect had predicted that this is going to be humongous. And now let me put on my analyst hat. See, the stock had actually resisted somewhere around 1600 odd levels. It's actually run up precisely about a month from now. In fact, 7th August is when this stock was at about 1600 levels, just precisely a month from now. And now it's already at, 1850, 1900 odd levels, right? So the industry already knew the kind of massive hit this is going to be. Now my concern is that, the stocks actually run up quite a bit. So buy on dips for sure, and not just for the Jawan, release. If you see in the second half of the year, there are a lot of, other strong lineups. I know the Hollywood lineups don't count for much, ardent Avenger fan myself, but we don't have very strong movies going into it, but at least a couple of lineups from that houses, that stable as well. So I think this stock will do well. I will just wait for some dip, somewhere close to 17, 15 odd levels to buy some more of this stock. But yeah, I mean, good days ahead for
right.
The Bollywood industry.
Let me reinterpret what you're saying. So go out there and buy Jawan tickets first, not the stock of PVR or multiplexes for the time being, because they've run up quite a bit. And you were talking about the run-up, Kush. Let me add to that. If a month ago, you had a Rajinikanth film releasing and making 600 crore rupee plus, and that is also part of Indian multiplexes. So clearly multiplexes, that's what I'm talking about. If there's a run-up, I'm not sure if that can be attributed only to Jawan expectations. There has been Gadar 2 that's also happening, but, go ahead.
No, just sorry to stop your flow. See, the trader in me, what I would do is I'd probably buy the PVR stock first, in options, in futures, or in cash, make money out of that, and then go and enjoy the movies, with the popcorn and all the all the frivolities. So yeah, that's how I would play. That's the only thing I was saying.
That is the better advice. Obviously, he is the stock market analyst. That's the better advice. Enjoy the movie and make some money in the process. That's how life is supposed to be. Don't just enjoy the movie. That's why we do a show over here to help you be more wise about making money. Kush, lovely listening to your comments on PVR. Stay with us for a second. Karthik, we've discussed all kinds of sectors, stocks and everything, but then there are big news triggers this morning, and the biggest news trigger, one of the biggest news trigger, is the fact that one of the world's largest semiconductor and electronics manufacturer is going to set up a new plant here in India. We're talking about Foxconn. Talk to us. What has been the news this morning?
So, Krishna, I think it's fairly clear that Foxconn is one of the biggest players in not just the world semiconductor industry, but even in India's emerging, very, very nascent entry-level semiconductor industry right now. I think what the news this morning suggests is that Foxconn, which already operates about 30 factories in India, which cumulatively do a business of about $10 billion from India, suggesting now that India is going to be the world's new semiconductor manufacturing hub, and not just semiconductor manufacturing hub, manufacturing of all electronics. And this, I think, comes again at a time just ahead of the G20 Summit, and comes at a time when China is choosing to be absent from its premier Xi Jinping attending the G20 Summit, and at a time when Taiwan and China in any case are at loggerheads with each other for geopolitical as well as economic reasons. And this statement coming at a time when the founder of Foxconn wanting to also run as the president of Taiwan,
Terry Gao.
And the messaging here suggesting that Taiwan is sort of, pledging its allegiance to India when it comes to setting up new plants, setting up new factories, and making sure that it cements its position as India's preferred trade partner ahead of G20. And also this sort of signaling that it is likely to disinvest or slow down its investments in China, which also up until now have been huge. I mean, Foxconn is one of the largest private sector investors in China. So pulling out of China or investing in equal measure in India is a great message just ahead of the G20 Summit.
Right, and if I may, the sources are telling us that Foxconn could be looking at a plant in Tamil Nadu to set up the EV manufacturing plant in Tamil Nadu. So it's going to be China to Chennai as far as Foxconn is concerned. So it'll be interesting times ahead. Kush, if I can get a quick off take from you, talk to us all this interest in manufacturing and setting up manufacturing, electronics manufacturing in India. Do you see, because it's not just Foxconn, you're seeing this happen from everywhere, EV plants, battery plants, it's all going to happen. It's a matter of time. It's not a matter of whether or not, but it's a question of when. But talk to us, does this kind of news impact stocks in the stock markets? And if at all, how does it?
Well, we've not seen any kind of, to be honest, we've not seen any kind of attraction or movement in any particular stock from this. See, Vedanta was, one of the, front runners for this, but, they're probably, setting up their own ways now, and hence we're not seeing too much of a traction here. This does augur well for the entire economy, as a whole. Manufacturing has not, picked up in the last, few decades. So if we are focusing there, and if, this is actually about to turn around, then this way, augurs well for the entire economy. So not an immediate, reaction on any stock that you would see. But yes, these are signs of good days to come in the near future. So yeah, I will keep my eyes out for or eyes open for some of the stocks that will probably gain traction once these news are confirmed, and once as they say, rubber hits the ground.
Kush, stay with us. We're going to move on to all the other big news that we're tracking for this morning, and that is away from manufacturing, electronics manufacturing. There is electronic rupee. So there is the electronic rupee, which is the CBDC, central bank digital currency. RBI has been bullish on it. It introduced the pilot in December 2022. We're about less than a year into it. Now, especially over the course of last week, Karthik, you've seen so many things happen. State Bank of India, India's largest bank, coming up with a QR code for interoperability between UPI and the e-rupee. And then RBI's Governor Shaktikanta Das literally using every podium that he's been speaking on in the last few days to push for the use of e-rupee and the advantages of e-rupee, especially when it comes to cross-border transactions, big block cross-border transactions.
So I think we'll come to all of that, and it's a large discussion we'll have. But what I really want to get from Kush right now is this sort of renewed energy, enthusiasm, and excitement around the whole fintech space. And we saw, the FinTech Summit and the kind of numbers, I think some 30,000 odd audiences in the stands watching the Global FinTech Summit. And then again, just ahead of G20, and we'll club all of this in the later part of the show.
Yeah.
But Kush, before we let you go, I just want to understand, what is this renewed push that we are seeing on FinTech in India, and how bullish are you on this interoperability of UPI, FinTech platforms, digital wallets, e-rupee? How is this entire story panning out?
Rather well. In fact, I will say the advent, or rather the push for Jio Financial Services and the kind of consumer base they have is a shot in the arm for this entire space. You see, the biggest challenge in the fintech space, we keep talking about India and Bharat as two probably will be the same going with the comments. But yeah, we talk about these two economies. We talk about these two economies, parallel economies. The only difference was that the bridge that was missing. Now, if Jio does manage to accomplish what it set out to, then I think there is an immense opportunity that the entire fintech space will have. Today we're talking about let me give a couple of examples. The fact that we will soon be allowed to pay via our credit cards, using UPI is one next jump. I don't think anyone's buying insurance, in the rural areas, on Policy Bazaar. Now, once these kind of transactions are, I wouldn't say allowed or enabled. It's just that once these transactions pick up space, the fintech space is probably going to go through the roof. Sadly, there aren't too many listed players to take advantage of that just yet. But yes, as in when the infrastructure is put in place, the numbers start to trickle in. I think there is going to be a huge leap, that the country will take, from
Kush,
in fact, for the entire fintech space.
Right, Kush, I was actually thinking, especially with the e-rupee, so many public sector banks and private sector banks, to big ones who have signed on to be part of the e-rupee pilots. I was hoping that there could be some kind of an impact on those stocks, at least for the time being. But for now,
I think the volume is too little right now for it to have any
Kush,
impact.
we even did a documentary on this on News 9 Plus, where doing our research, we realized that the amount of e-rupee in circulation is 0.0001% of the currency notes in circulation. So we have a long way to go as far as the e-rupee is concerned. But for now, Kush, thank you so much for taking time out to be with us this morning here on Business Plus on News 9 Live. Lovely having you. Hope to keep having you again and again as often as possible. But for now, we'll let you go. Have a good day. Have a good trading day, Kush.
You too. Thank you so much for having me over.
Right. Okay. We're still in the rupee space of discussion because, Karthik, something amazing has happened, and that is the fact that UPI, already the adoption of UPI, so we all love UPI. Indians love UPI. Indians want to export UPI everywhere they are going. But now you have voice UPI, Karthik, which means that no typing anything, just talk to your phone and get Amit is going to get us all the lowdown on the subject. Amit, talk to us. Are you going to talk and then money is going to transfer to my phone, or how is it going to work?
Hello, thank you, Pathan.
Hi, Amit. Morning.
It's called Hello UPI, and it's part of the slew of products that have been unleashed for the customers by the NPCI, the National Payments Corporation of India. And with this, presently in the languages of English and Hindi, you can transfer money or make transactions through a conversation, or through an app, through a telecom device, or through other IoTs like you have in your car, or those sorts of things. So that is part. It is part. The other products they had unleashed were UPI Lite lately, where you could make tap payments, tap and pay, and of course, e-rupee, as you just mentioned.
But voice is another panacea, if I might may, for those especially with disabilities, or those with other issues. Voice makes it that much more simpler. Karthik.
It does, and it also makes it a little riskier, if you ask me. My point is, UPI Lite, I think, was all right. That to a certain limit, I think under 2,000 rupees a day or something, or 200 rupees per transaction, 2,000 rupees per day, you could just tap or you could scan and pay without putting in a password or a PIN code. Now, PIN or whatever that's called, a PIN, not a PIN code, right? A PIN. Now, the challenge with voice-based transactions is that, everybody in your vicinity is pretty much hearing what you're saying. So how do you say, hey, pay Krishna, hello, it's called, right? Hello UPI.
Hello UPI.
Hello UPI. Hello UPI, it'll spring up like a Hey Siri or a Hello
Alexa.
Google or something, or Alexa, right? It's going to spring up, and then you say, pay Krishna Kumar 1,000 rupees. I'm not paying you that, and I hope my device is not listening. Anyways, yeah, so
Nah, no luck, I didn't get any.
so it's going to transfer. Now imagine the complexity with that. What if I have 4 Krishna Kumars on my phone? He'll say, oh, which Krishna Kumar? Are you talking about Krishna Kumar K? Are you talking about Krishna Kumar TV9, Krishna Kumar News 9? So the kind of answers I will have to keep giving to every prompt is going to make my life a little more complex. So for somebody like me, I would just prefer to go onto an app and find the right Krishna Kumar and pay him 1,000
Well, that's
rupees.
Karthik. Amit, would you prefer a voice UPI?
What I'm worried about is the recognition encryptions.
Okay.
So I mean, and I'm just thinking aloud.
Yeah, please do.
It's heyday for mimicry artists who can modulate their voices if they can get through that.
Hey, you don't need a
encryption.
mimicry artist in the day and age of artificial intelligence to mimic voices over here. So,
There you go.
so, well, of course, these are the risks, to put a statutory warning to this discussion. We're only discussing the pros and cons of what's possibly could be Hello UPI, which is voice-based UPI. Once it gets into practice, we'll know further details on what are the advantages and disadvantages. But for now, we're letting you know that Hello UPI is a reality that's going to happen very soon. Moving on, Karthik, we've been discussing a few things apart from voice-based UPI, and especially fintech space is something you've been alluding to, that we'll discuss this later on in the show. We are in that later on part of the show. So in which, and mainly because we have G20. All roads lead to G20 today, Karthik. India's time in the sun as a global superpower. What can we expect from the G20 apart from all the big geopolitical scenarios playing out, Biden coming, Xi Jinping not coming? What we do know is that from the stated agenda of G20, 2 big headlines coming up. One is a regulation on cryptocurrencies, and vis-a-vis, we'll know what happens with CBDCs once they come up with the regulations for cryptocurrencies. So let's begin with crypto then to start with. Talk to us, there is a lot expected from G20. How does a regulation for crypto make sense at a time when every government, 11 of the 20 G20 countries have already introduced their own CBDC or central bank digital currency?
So I think, Krishna, to begin with, it's important to keep cryptocurrencies in a separate bucket and CBDC in a separate bucket, simply because cryptocurrency is unregulated.
Yes.
And nobody in the world still knows, what is the final good end use of cryptocurrencies.
Yes.
Right. And CBDC, of course, is regulated and monitored by the central banks of various countries. So CBDC is a digital avatar of the cash that you carry in your wallet. Cryptocurrency is something else altogether. So let's focus on cryptocurrency. I think India has had its tryst with cryptocurrency, and not a very positive one at that.
Yep.
I think our fears emerge from the fact that cryptocurrency, because of its very nature of running on blockchain and being untraceable and could be mined using tons and tons of electricity, is something that can be made to, used to make transactions across borders in the whole sort of, space of money laundering, in the whole space of tax evasion, more importantly, in the space of terror financing. Yes. So India has been very categorical in stating that cryptocurrency is something that we will be very, very watchful of. Now, globally, there has been much larger acceptance of cryptocurrency, and there have been, news items which have led to crypto prices, Bitcoin prices shoot up and crash down. Every time, for example, Elon Musk says that, hey, I'm going to accept cryptocurrency and I'm going to accept Bitcoins to, for you to pay for a Tesla car, the price shoots up. Yep. And the next day he introduces something called a Dogecoin, and the value of Bitcoin falls down. But anyway, let's not digress. Let's stay on focus of G20. So there is a synthesis paper prepared by the IMF and the Financial Stability Board. This has been in the works for a while. That synthesis paper is likely to be presented. India is pushing for a global framework through this synthesis paper, and maybe a debate that would happen on that synthesis paper on how the whole world needs to come together and have a global architecture that defines how cryptocurrencies are monitored and regulated. Because at the end of the day, it is something that can be used on the dark web. it can be used for somebody sitting in India on the dark web to make illegal purchases outside the shores of India, or transfer money in the form of cryptocurrency, which doesn't leave a trace and is in this sort of, distributed ledger blockchain ecosystem, which becomes impossible for even a central bank to penetrate into. So these kind of purchases or these kind of transactions can happen across the border, leading to tax evasion, leading to money laundering, and leading to perhaps the potential of terror financing as well. So India is very clear that this synthesis paper, in some form, in some shape, needs to take the shape of a global framework and get other countries to agree to this. There is no resistance, so to speak, on agreeing to or wanting to agree to a global framework, but honestly, there hasn't yet been any headway also. So the point is that yes, there would be a paper. That paper, because of the complexity of the whole cryptocurrency blockchain ecosystem, is not going to be easy to pass for any government right now. And eventually every government will have to pass it as a bill in their respective countries, in their respective constitutions. So it is going to be a large debate. It is something that India really wants to push for. But from what we understand, there hasn't yet been anything tangible in that synthesis paper also. So it could well be, the next 5 G20 summits across 5 different countries before it actually becomes regulation.
Karthik, the reason why I was even asking you, when I talk about CBDC and crypto at the same time, because many view the rise of CBDCs as a response to the popularity of cryptocurrencies across the world, and of course, cryptocurrencies and the risks attached affecting so many people, and so governments and central banks sort of giving the people another option where there is not so much volatility.
Yeah, like Karthik mentioned, with CBDC, you know where the source is, who is monitoring it.
Yes.
Crypto, nobody still knows where's the source of Bitcoin.
Right.
They halve their value every 4 years. Yes. Why do they do it? Nobody knows. With CBDC, all those eccentricities will not be there around
Fair
it.
enough.
So because there is you know where the source is.
Right. And Karthik, when the volatility happened and so much money was lost because of volatility in cryptocurrencies, many in India were asking for the banning of cryptocurrencies because they said this is an asset that nobody should be touching. This is illegal in the first place. So I was always curious to understand where in the legal spectrum of things do cryptocurrencies lie going forward, especially with governments themselves wanting to introduce their own digital currency, albeit a very different digital currency to cryptocurrencies. So as you're talking about, there's a good chance that even at the end of this G20 summit, we might not have much clarity on how governments, especially G20 governments, want to regulate cryptocurrencies. Apart from cryptocurrencies, the other big economic item on the agenda of G20, Karthik, is the multilateral development banks, or MDBs. We're discussing MDBs at G20 Summit in India at a time when there are questions being raised on the relevance of something like the World Bank. How many development projects in emerging economies are the World Bank funding? Is there enough coming out from IMF to support, or does the world, especially the global South, have to be dependent on the IMFs and the World Banks of the world?
You're right, Krishna. So I think it's definitely a very contentious issue. And again, India is using this opportunity of being the president of G20 at a time when Prime Minister Modi, even at the BRICS summit, has been really talking about this emergence of the global South, right? And this global South sort of coming together and standing up as an equal to the Western powers that be. So at a time when this global South emerges, there are questions being asked on the relevance, the scale, and the sort of viability of World War II vintage institutions called the Bretton Woods institutions like the World Bank or the IMF. And there are many more. I think there are some 31 or so multilateral development banks, right? So this whole multilateralism is in question right now, where the angst really comes from the fact that these are Western created concepts looking at funding development in emerging markets. These emerging markets being Asia and Africa, North Africa, mostly North and East Africa. And the fact that these are loans being sanctioned for development without really taking into account the global development goals, the GDGs, not just the SDGs, which are the Sustainable Development Goals, right? So there are global development goals around poverty eradication, around dealing with hunger, around dealing with digital development, digital sort of, transmission across the world, and penetration of digital technologies the world over. And the consensus right now seems to be that these multilateral development banks are not being able to do the kind of justice that they were supposed to do for the emerging markets and for African and Asian economies when they were set up in the 1940s. Now, add to this the geopolitical tension around China thus far acting as a multilateral development bank on its own accord. So look at the kind of funding or debt it has given to a country like Sri Lanka, or the kind of ports that Pakistan, or the ports that it controls in Africa, right? So there is this unilateralism with China and this multilateralism with the MDBs, and India now wanting to emerge as a leader of the global south and fighting the battles of the emerging economies, saying that there needs to be this entire restructuring of debt, and there has to be an equal stake, equal participation on the countries which are receiving this debt, and they need to have a say on how this debt will be repaid and what this debt should eventually be used for. So it should not be China, or it should not be these established multilateral development banks which instruct the countries which are receiving this loan to invest them only in a certain projects which are of interest to them.
Right.
That's where we are.
Right, that's where we are. And of course, this is going to be discussed at the G20 Summit. So I think this is the beginning. India, in a sense, sort of initiating this discussion, and hopefully we have results to show after the G20 Summit is done, and maybe the first ever India-led MDB can take place in the future. We wouldn't know, but we're a long way away. But I'm happy that the conversation is happening. I'm happy that the relevance of the IMF and World Bank are finally being questioned, thanks to the rise of the global south, thanks to the incredible rise of India as a global power. But with that, Karthik, I'm afraid this conversation can go on for another hour or two, but we have completely run out of time here on this morning's edition of Business Plus. Thank you, Karthik, and thank you, Amit, for taking time out to be with us. It's a wrap here from my side. This is Krishna Kumar signing off. Keep it with News 9.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.